Under this structure, an intermediary bank would buy protection against loan loss from an insurance company and then sell protection to a different bank seeking to execute the risk transfer transaction. That is right. Wall Street explores novel ways to repackage bank loan risk. In other words, Wall Street is trying to run away from the Bank Term Funding Program complications that may come when the program ends in March. However, as of right now, the Fed is yet to comment on this. So hopefully Wall Street doesn't get their hopes up. Aside from over-leveraged banks, hedge funds are using 2,000+% leverage. They are now being closely watched by European regulators, which, yeah, it seems like something that should be watched. Now, the mega rating agency now rated AMC in quote selective default and believes that it will run out of liquidity, or in other words, go bankrupt. This is a narrative that people are pushing across the board on Twitter, and this was actually corrected and I wanted to clear it up. The bondholders accepted a little less than what was originally loaned. This is negotiating and not defaulting. AMC is called to schedule a limited default. In other words, this is lender renegotiating, and the debt repayment may be positive for AMC. So take everything that you hear initially with a grain of salt. On top of that, AMC just landed another distribution, and this may have just been predicted by one of these tinfoil hat theories. Checkmate on October 1st of 2023 tweeted U2 coming to AMC theaters because Adam Aaron tweeted this. Fascinating article suggests you should make and trade friendship bracelets with the many others watching Taylor Swift The Eras Tour, along with you at an AMC theater starting October 13th. Well, AMC now just landed distribution of a documentary by Damon and Affleck regarding U2. You can see that right here. Kiss the Future, the critically acclaimed documentary about a creative community amid the siege of Sarajevo, the resilience of its people through the art and music at the table of post-war concert by U2 to receive a theatrical run exclusively at AMC. This is a big plus for AMC for the fundamental side of things. Now, it also seems that other funds are adding to AMC across the board recently, and we have been covering it, but also a lot of them are adding very, very tiny positions, which could be a scary thing to see. As we know, you are able to potentially sue and basically claim that, hey, I am a shareholder. I have a say in this. Moving on, dark pool volume is getting out of hand. Today's off-exchange dark pool volume was 5.02 million, which is 60.43% of today's total volume. And this was for January 31st, which means that the lit volume was 39%. And over the past days, the average dark pool volume was 53.29%. So this is over a 7% increase in dark pool volume and a 7% decrease in lit exchange volume. In my opinion, that is exactly why you're seeing this barcoding bullshit. AMC chopping around at $4, still hugging this trend line, still waiting for that break higher. There's not much to say there. AMC Ortex, 11.02% short interest. It is still on the rise as of right now. From yesterday, basically unchanged. 27.61 million shares shorted according to Ortex. However, if you come down and look at the short exempts, they dropped another 175,000 on it yesterday on the 31st. You come over and you take a look at the chart. What did we say, guys? The algorithm was ready to break it out of this channel, out of this trend line after this touch. This is exactly what we have been tracking, and market makers didn't let it happen yesterday. They saved some firepower to hold it in that channel, in that zone, right? Calls 6,000 compared to 12,000, puts expiring in the money, not good for AMC. 76,000 calls expiring out of the money, going to market makers. GameStop also doing this bearish pattern here. We saw a George W forming out and we thought we were going to break higher. However, it looks like it is going to follow the inverse cycle and sell off even further for GameStop. Hopefully we see a hold around $13.60. As of right now, that is what we're watching. GameStop, 1,000 calls compared to 2,000 puts. Not much happening on the options chain, to be honest, as well as the short exempts. It's kind of just stagnant. Now, I wanted to cover Disney really fast, $96.77, because they have earnings coming up. And in my opinion, this is something I expect to see. The trade in the trading challenge is taking a little bit longer than I'd like, but I am still in Disney with a stop loss. However, right now I do think Disney has a chance to come down, flash down to $93 come earnings, okay, February 7th, by February 7th, and then post earnings come back up and test $100. That is where I think Disney has the potential to go, so just keep an eye on that. I think Disney is going to try and test $100, and then potentially, if we can have a clean break over that, come up to $107.50. Now, Another sign the commercial real estate CRE crisis is worse than we thought. The Xerox building in Washington, D.C. sold for $25 million just now and was purchased for $145 million just over a decade ago in 2011, which reflects an 83% loss on the 19-story office building. Now, the reason I wanted to bring this up is because I just sold my Xerox stock in my long-term portfolio about a week and a half ago, and I do have to give you guys a full update on my long-term portfolio, so I wanted to throw this in there. Now, yesterday, this is what happened with the Fed, and we're going to talk about why the market, crypto, Tesla, and other plays are doing what they're doing, and then prep you for what is about to happen tonight after hours. Before we do that, guys, and get into all this stuff, please join the Discord. The link is right under the video. I'm in there on the daily. Come talk with me, request videos, post gains, post losses. Honestly, the best place to go, the best vibes. There's no bad questions in here, so whether you're a beginner or advanced trader, just join the Discord, level up your trading journey, and come talk stocks with people who want to become financially free like yourselves. That is the second link under the video, as well as pinned in the top of comments. Also, if you use my link and sign up for Moomoo and make a deposit, which is the top link in both, you're going to get free stocks that are worth up to $30,000. And yes, it is free money. There's no reason not to do so. But even if you weren't getting free stocks, you're getting level 2 order book data for free, so you can see where whales are loading up and dropping off shares, access to viewing other exchanges, and my personal favorite, the customizable earnings calendar, as well as the notifications. Those are the two main reasons I like Moomoo. So just use my link, sign up, and make a deposit. Now, yesterday, Fed Chair Powell says that a March rate cut is unlikely, and then the SPY ended up selling off even further. As 6 interest rate cuts are being priced in or have been priced into the market, the Fed is basically saying that's way too optimistic. He's going to stick to his guns and say rates are going to be higher for longer and potentially end up cutting in May. Now we come and we look at the SPY, and the SPY had a nice flash down. This is exactly to a T 100% what I said in yesterday's video. Watch for this breakdown to 482 to 482.50. I said to watch that level. We came right down to it, and now the SPY is bouncing. We want to see volume increase on this bounce higher on the overall market, trading at 486.61. The SPY is going to come up to either 489.15 or about 490.15. Okay, so that dollar range, there is a gap to be filled up here on the overall market. However, believe it or not, the SPY did not fill this gap to the downside. It ended up just basing. So the SPY still does have a chance come down to about 482.72 or so. Moving on, crypto sold off slightly with the SPY as well and is holding itself back up. Tesla sold off as well, holding this trend line as of right now. Still very bearish on Tesla, looking bearish, right? I am personally bullish on Tesla. I do still own all of my stuff, just keeping an eye on this, waiting for that next catalyst. And here are some things that are going to affect the overall market. And the first thing being war. The United States has approved plans for multi-day strikes in Iraq and Syria against multiple targets, according to Iranian personnel and facilities. And finally, earnings. Apple is coming out, as well as Meta and Amazon, which are basically the largest holdings in the overall market and are going to have an effect on it. Apple just got rejected at this fib level at the 618, and if Apple does break higher, I'd watch for around 187.50 to 190.50. If Apple breaks lower, I hope we see a hold at 183.30, and if we don't, Apple could come all the way down to 180.30. Meta has been ripping higher. Chances are we get a cool off. There's also a gap fill down to about 369.50 to 371.50. So watch those levels as well. If we gap higher, Meta has a price target up here of 436.50 on the fib. Amazon, my opinion, coming higher. There's a gap to be filled at 163.32 or so. Watch those levels on these stocks. You guys let me know if you're playing any in the comments down below. That is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Make sure to get your free stocks and join the Discord. I love you all. Lottery Stocks out.